Sandeep Shah is also with us, Associate Director of Motilal Oswal. Sandeep, good afternoon. Your thoughts on this, volatility that we have seen, especially in the broader market?
Good afternoon. The last time I was on your show, I think it was 18th May, the Sensex was about 36,000 or so, and I had said that there might be more short-term pain, but the markets could hit a new high. And about 2-3 days back, we have seen the Sensex hit a new high. But as you rightly mentioned, the broad market is far, far away from a new high. If anything, some of the small cap indices are close to 2018 lows, and even some of the mid caps as well. This is, of course, predicated in an environment where there is where liquidity is abundant, where growth is there, but there are concerns that investors have, whether it's globally because of global growth, which could get affected because of the trade wars, as companies actually cut back on their capex because of the uncertainties, as well as crude, which of course now is back to more reasonable levels. I have, of course, been mentioning since last year that as long as crude doesn't sustainably stay above $80, we are reasonably comfortable. So that seems to be holding out for now. And of course, the concerns on the general elections, and plus, of course, the mutual fund rationalization that has happened. Now, however, there are two ways of looking at this. One way to look at it would be to look at the pain that investors have gone through in small and mid caps. And the other way to look at it is actually see how a lot of good quality companies, whether small or mid-sized and the large ones, have actually grown in earnings. And some of the mid and small ones, actually stock prices have fallen. And while I'm not saying that this is the absolute bottom just yet, but I think we are fairly close to it in terms of valuations. I think valuations in the small and mid cap space are beginning to look very attractive now. There might still be some, exceptional stocks which are still expensive. But I think if you're willing to hunt, you'll find a lot of good quality small and mid cap stocks which are looking very attractive. Of course, the far safer thing would be to buy, small and good quality small and mid cap mutual funds, or even multi-cap mutual funds, which have some exposure to mid caps, so that you're able to play this opportunity. So from that perspective, while I would think that the small and mid cap indices may take a long time before they get to a new high, could even be next year perhaps. But I would expect that quality stocks would continue to do well because growth is there, liquidity is there. The only thing is that investors have concerns about future possibilities which haven't yet come about. So in this environment, I would remain positive on markets. Of course, as far as large caps is concerned, I think you might want to stagger that in rather than chase them at these levels.
Okay, the